You threw this term at me, the final boss. I love this term. You got to walk me through it. What does it mean?
It is the indirect cash flow statement, which was an assignment that I got in 2007 at my first job at Deloitte. Was auditing a very large real estate investment trust in Chicago. They were the second biggest owner and operator of malls. Maybe they still do. I don't know if they do, but they owned South Street Seaport. They owned Water Tower Place. I don't remember what their market cap was, but they were humongous. 10 Qs, 10 Ks. I was staffed on it year round. After my maybe 6 months of being on engagement, they gave me the cash flow statement to audit. This was 07. So this is like an Excel-based work paper. It took 2 months maybe to audit. And the way it was set up was like a puzzle. It was really hard, but there was an incredible amount of pride and satisfaction that came with solving the puzzle. And it really kind of scratched the nerd itch in me. When I was a sophomore in college and I had my first financial accounting class, I was just like, I kind of like this. And the way it's set up is almost like a matrix. There's rows and there's columns, and the rows are all the lines of a cash flow statement. So if it's an indirect cash flow statement, you're starting with net income and then you're bridging down to cash flows. So your net income is everything that flows through equity. Then you have to assign or ascribe all the movements in the balance sheet to where they should sit in the cash flow statement, whether it's an operating activity, a financing activity, an investing activity.
There's nowhere to hide.
The y-axis, the rows are the lines of a cash flow statement, and then the columns are the changes in every single balance sheet account. And then the cells in between, it's almost like tic-tac-toe. You have to investigate, okay, deferred revenue moved from X to Y. And there's a narrative that goes with that. We sold more annual subscriptions than we burned off in deferred revenue. But sometimes for maybe a PP&E account or a CapEx account, the whole change isn't all going to go into one row. So you really have to that's why I said there's nowhere to hide. You have to drill into it. You have to have a lot of conversations with the client and kind of figure out where everything slots in.
Enron didn't even want to have a balance sheet. So why is this so important to a business like yours? You don't have stuff that you can touch really in the real world, but I'm guessing it helps you get a grip on why things are moving.
I want the people that work on my team and the people that work for me to have a very high fluency in how they talk about the business, especially in today's environment where even growth companies aren't being valued as much on, maybe if you're an AI company, but here's super high revenue multiple. There's a huge focus on cash flows, and it's not uncommon for a company to have a pretty big difference between their cash flow and their net income or their EBITDA.
Their adjusted EBITDA.
Or their adjusted EBITDA. And so me as a CFO, if I'm sitting in the boardroom or talking to the investors, I need to be able to talk about how you bridge between those two numbers. Maybe they're close to each other, but maybe they're not. And if they're not, I need to be able to really tell that story. And I need to know what I'm talking about. And I need the people that work for me to know it too. And there's really just no better way than to actually get in there. When you do that work, the kind of magic of double entry accounting is what's at play. You have to kind of think almost like T accounts.
I've been in a room too where I was walking somebody on my board through what our EBITDA was. And I'm like, I'm just making it up, and that'll get us to 11.2. And he's like, I have you at 14.4. And then I'm like, really? And so we were both talking about profitability, but different ways of looking at it, right? So I was talking about it from the operator's perspective. He was talking about it from the management perspective of what they were going to be able to pay dividends on. And then there could have been this third voice in the room, which would have been what the credit agreement would have said it is. So all three can be true, but if you can't bridge between them, you may as well just stop talking at that point because nobody's going to agree, and you can be right, but actually wrong.
Yeah, it's like pro forma A, pro forma B, pro forma C. This one goes there, this one goes there, this one's for this purpose.
To your point, being able to walk through that, you know the business better than anybody else.
And I think for CFOs, the number one currency we have is credibility.
Speaking of credibility, a lot of that comes down to communication. You've told me that you like to talk about things in plain English. I think we've lost that a bit in today's business environment, especially on LinkedIn.
Every post is like a poem.
What's the best practice when you're speaking internally with your team, talking in plain English? Will you tell people to slow down and talk to me like I'm a 5-year-old?
I tell people to slow down. I say, pretend I have the intelligence of a dog. Try to avoid jargon. Keep it nice and slow. Signal when you're going to move on to something. A big thing for me is the power of reps. It's a spectrum, like coming onto this podcast, going into a board meeting, doing an all hands. Like those are things that have made me anxious and make me nervous. But the more reps you get doing something, then it becomes less of a big deal and you kind of get into this flow. For someone else, just having to lead the team meeting may be something that makes them a little bit nervous. And so you need to give them those reps. And when people are nervous, I think they have a tendency to maybe talk really fast, or if there's a little bit of insecurity or imposter syndrome at play, which I've certainly felt and experienced in my journey, there can be a tendency to over-explain. And, nothing screams confidence more than well, you hired me for a reason. I know this stuff, so I'm not going to spend a lot of time proving that to you over and over again. I'm going to tell you what you need to know. And if you want to know more, you can ask me.
Brevity.
Yeah.
Important skill?
Yes.
As a CFO, you think shorter can be better?
I don't want to say shorter is better than longer. I think succinct and to the point, continuing to sharpen your judgment on how should this subject matter be presented. It needs to be tailored to the audience to some extent.
It does.
It's almost like the more higher up that I'm presenting to, the simpler I go. It's a little counterintuitive, but if you think about somebody who's on a board, they probably have 10 or 12
They probably think
board
of you
seats.
5 hours a year.
Yeah, exactly.
Maybe a little more than that.
Probably a little more. And, I would much rather have them say yeah, we got that. We can move on or tell me more about that than to really just kind of get lost in what you're saying or glaze over. I appreciate it when people assume that I don't have much context and don't really know what they're talking about, so they can walk me through it, and then I can maybe speed them up a little bit. I prefer that more than somebody who assumes I'm all the way here on the learning curve, and they're starting on second base.
Let me ask you something. If your board wants financials, would you be certain you're not wasting money on SaaS? Or if a major renewal hits, would you know if you're paying a fair price? Your vendors would. They see thousands of deals every year, but most finance and procurement teams see one deal at a time. That's a tough way to negotiate. SpendHound fixes that intelligence gap. It's one place to track all your software spend and gives you pricing benchmarks across more than 10,000 SaaS and AI vendors. And it's based on real spend data from over 8,000 companies. SpendHound connects to your financial systems and shows every software dollar you're spending. Contracts, renewal dates, overlapping tools. Nothing quietly auto-renews, and you don't pay twice for duplicate tools. SpendHound is the #1 rated SaaS spend management platform on G2. It's trusted by teams at ZoomInfo, Hootsuite, and Kit. Free forever, wow, for SMB and only $10,000 per year for enterprise with $150,000 savings guaranteed. If you want to stop negotiating blind, go to spendhound.com/CJ. That's spendhound.com/CJ. Trusted by over 1,000 finance, ops, and procurement teams.